Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I was talking to my insurance broker for my 20 unit apartment complex. I'm trying to switch my insurance from replacement cost insurance down to actual cash value insurance. I have a whole video talking about that for more details, but at a high level, replacement cost insurance is if you have a total loss. So what's a total loss? It's if your apartment burned down to the ground. Replacement cost insurance will give you enough money to rebuild the apartment complex to 2024 standards or to today's standards, right? So, for example, if my 20 unit apartment complex were to burn down, the replacement cost insurance would give me enough money to rebuild a 20 unit apartment complex to 2024 standards, right? It's nice for protection, but it's more expensive, right? Versus actual cash value, they just pay you out a lump sum, and that money is not enough to rebuild that apartment complex from the ground up. So, for example, to give you some numbers here, for my 26 unit apartment complex, replacement cost insurance is $3.3 million. So, what that says is it costs $3.3 million to rebuild that 26 unit apartment complex till today's standards. And every year it goes up because labor goes up and materials goes up, right? So, and versus actual cash value insurance, I could get it for $1 million, right? And basically, what actual cash value insurance does is it gives you enough money to pay off your loan, to pay your lender. That's all lenders care about, right? Do the lenders get their loan money back? If so, they're happy, right? And it'll give you back enough money to give you your down payment back, give you any renovation costs you put in there, and then give you enough money to clean up the land to then sell it, right? Or if you were to try to rebuild it, maybe you can only build like, instead of a 26 unit, maybe you can build like a 6 unit, right? Apartment complex, for example. So it really depends, right? And for me, I was gun ho about replacement cost insurance, but I pivoted to actual cash value insurance because I thought about it. If my apartment's burned down to the ground, do I want to deal with rebuilding a brand new apartment complex that may take 2 or 3 years? The answer is no, right? I don't want to do that. I'd rather just take the money, right? Pay off my lender, get my down payment back, get my renovation costs back, get a little extra money on top, sell the land, get some money from that, and then move it into another market, right? So it gives me more flexibility, right? I can move it into California, I can move it into Huntsville, Alabama, like whatever that looks like. So once I learned about that, I was just like, you know what? I started asking for quotes for actual cash value insurance. And for my 26 unit, basically for context, my replacement cost insurance is 3.3 million coverage, and the annual premium is $30,000, and it's been going up $5,000 every year, right? Versus the actual cash value insurance policy, which is a little bit, I forgot the exact amount, but I think it was like 1.3 million, and that one was going to cost me about $9,000. So that's a $21,000 difference. But unfortunately, at the 11th hour, because my property is C class and it's older, they denied it. They denied me the ACV policy, so I'm stuck with my traveler's policy, which is replacement cost, which is 30,000. But what was the deal breaker was that the wood was old, but I was in the process of replacing it. So I'm trying to, because when you get the policy, they're gonna take some pictures, do an inspection, all that stuff, and then if they like it, they'll insure it. If they don't, then they won't, right? So they didn't like the fact that I was in the process of repairing the wood, but I just said, hey, I'll be done at the end of the month in August, and would you reconsider then, right? So what's nice about insurance is, yes, I locked into travelers, but if I were to change, I just have to, usually travelers will prorate me back the money or for the number of days that they insured me, but they might charge me this like cancellation fee. I don't know what that's going to look like, but if I can save $21,000, that's great, right? If I save $21,000, I increase my cash flow by about almost $1,800 a month, give or take, which is like renting out 2 or 3 apartments in my apartment complex. And if I increase my NOI by lowering my expense by $21,000 and assuming a 10 cap, that's going to increase the value of my apartment by 210K, right? So it's a double win, right? But I'm taking the risk of it burns down. Well, I can't rebuild it, right? So, anyways, I'll keep you updated on that. But it was a bummer that my 26 unit got rejected on the insurance for ACV, actual cash value, because I do want to save $21,000 to increase my cash flow even further, right? So then I'll be cash flowing $12,000 a month now instead of 10. And then, so I did the same thing for my 20 unit, right? And I'll keep you guys posted on my 26 unit. But for my 20 unit, I asked for a quote as well, right? So I just said, all right, I have replacement cost insurance. I think it's around 1.3 to 1.5 million dollar coverage, and they're charging me about $15,000, right? It went up about 2,000 bucks since a year ago, so not terrible, right? But I got an actual cash value policy, which was about $900,000 coverage, and the cost was $5,000. So I would save $10,000 on this property, which would increase my cash flow by about maybe 800-ish bucks a month, which would, that's basically 1 to 2 units of rent, right? Right there. So, basically, once I wanted to move forward with the ACV, I signed this like non-binding agreement. They're gonna do an inspection, take some photos. Underwriter will take a look at it, and then they'll get back to me, right? So typically they said that, well, if it's under a million coverage, they usually don't do an inspection, but who knows, right? Due to the age of the property, they still might do an inspection. So we'll see what the underwriter says. But you can see this starts to stack up, right? If I can save $10,000 on my 20 unit and $21,000 on my 26 unit, that's $31,000 in savings. You divide that by 12 months, what is that? That's like almost 2,200-ish in cash flow. Sorry, I can't do the math on top of my head, but about, maybe 2,200 a month in cash flow. And that's a decent amount, right? That's a lot of cash flow there that I could use, that can help cover my mortgage here. They both increase the value of my apartments, assuming a 10 cap, right? So I would increase my NOI by $30,000, assuming a 10 cap. That's $300,000 in equity just by changing my insurance, right? But yes, I'm taking the risk of, if it burns down, I can't rebuild it, but that's okay. I'm fine moving my money elsewhere if that's the case, right? For me. So, that's just kind of the risk that I take. So, kind of moral of the story, what insurance is, you have to understand the pros and cons of each. While I was renovating them, I had replacement costs, and that makes sense, and that's okay, right? Because when you're renovating, there's more risk, right? There's more risk of damage and loss. Versus now that it's stable, I'm not as concerned, right? So it's okay to drop down my insurance. And like I said, it's tempting not to save $30,000 a year, which is like pure cash flow, right? So 2,200 bucks a month, which is, that can help cover my property tax and my insurance, right? For my property here in California, and it helps me take one step closer towards retiring from my W-2, right? So we'll keep you guys posted. I am traumatized from this insurance carrier, but hey, why not take a shot if I can save $10,000, and I might be able to save $30,000, right? So we'll keep you guys posted. But anyways, let me know if you have any questions. If you are looking to buy your first multifamily deal with some guidance, check out the mentorship program. Otherwise, please like, comment, subscribe, and hope to see you in the next one. Thank you.